guys, welcome back to another video. This is Tan Investing. On this video, we will look at which one is better, Northland Power or the Transalta. So let's get into the video here. So we'll start off by looking at the 5-year chart. So from 2016 to 2021, if you were to look at the Northland Power, in 2016, it was around $20. Around 2020, before the crash, it went up to $30. And then with Joe Biden's talk about renewable energies, it went up to $50. And now it's trading around 40s. And then renewable energy, back in 2016, it was close to $12. And then it did go up to $15 in 2017. And 2020, it was around $18. And in 2021, around the same time when the NPI Northland Power went up, this one also went up to about $24. And at the moment, it's trading around $18. And now we will just look at the informations on the Northland Power and the renewable. So Northland Power, it's trading around $41.36. The PE ratio on this one is 33.49, whereas the PE ratio of renewable Transalta, it's about 36.46, which is a little bit higher than the Northland Power. Both of them does provide you a dividend. This is NPI is 10 cents, which is 2.97% yield. The Transalta is 0.07. The yield is 4.87. So yield-wise, it does provide you higher yield. But if you look at the dividend, it's lower because the price that it's trading at, it's also almost half of what NPI is trading at. And then if you look at the 52 weeks range, the NPI used to be $30 to $51, and Transalta used to be about $13.65 to $24.47. So as you can see from just the 52 weeks range, it looks like the NPI still has a lot room to grow to reach to the 52 weeks high, but it does not necessarily mean it will reach to the 52 weeks high. It could be higher or lower depending on the performance. And if you were to look at the market cap as well, the NPI has 9 billion. This one has 5 billion. And the ex-dividend date has passed on NPI on the 28th of May. The renewable is coming up on June the 14th. The annual dividend date, if you look at it, it's 1.20 Canadian, and this is 0.94 cents Canadian. So Northland Power is a Canadian-based power corporation. The company is focused on developing, building, and owning and operating clean green power infrastructure assets in Canada, Europe, and other selected global jurisdictions. Its segments include offshore wind, thermal, onshore renewable, and other offshore wind segments includes Gemini and Gorge 1 operating facilities. Thermal segment include Iroquois Fall, Kingston, Kirkland Lake, North Battleford, Spy Hill, and Thorold operating facilities. Onshore renewable segment include Cochrane Solar, Grand Blend, Jardins, McLean's, Mount Lewis, and solar operating facilities. Its facilities produce electricity from clean burning natural gas and renewable resources such as wind, solar, and biomass. The company owns and has a net economic interest in approximately 2014 megawatts of power producing facility with a total operating capacity of approximately 2,429 megawatts. And now we will look at the Transalta. Transalta is a Canada-based company that owns a portfolio and renewable and natural gas power generation facilities and other infrastructure assets. The company has interest in approximately 23 wind facility, 13 hydroelectric facility, 7 natural gas generation facilities, 1 solar facility, 1 natural gas pipeline, 1 battery storage project representing an ownership interest of over 2,537 megawatts of owned generating capacity, located in the province of British Columbia, Alberta, Ontario, Quebec, New Brunswick, and states of Wyoming, Massachusetts, Minnesota, and state of Western Australia. Its facility include South Headland Power Station, South Cross, Sarnia, Parkeston, Fortescue River Gas Pipeline, a Colclex, Appleton, Bone Creek, Galata, Moose Rapids, Taylor Hydro, Waterton, Big Level, Lee Nordice, New Richmond, Summerview 1, Wolfe Island, and Kent Hills. One of the most one of the top growth stock in Canada over the last few years has been Northland Power. The entire renewable energy sector has been rallying and offsetting a ton of growth potential. However, Northland has been one of the best growth stock in the industry. The stock continues to have one of the most promising growth plans of any company in its industry. So Northland Power will commit up to 20 billion over the next 5 years to grow its portfolio. These will consist of both organic growth project and attractive acquisition the company can find. It's not just renewable generating asset that it's looking to buy either. The company is also looking to continue adding utility business to its portfolio for stability and wants to diversify its green energy exposures to other ancillary business like clean tech. Northland is on its way to becoming a massive green energy powerhouse, giving it tons of prospect for growth in the future. So in my view, at below $40, the Canadian stock is so cheap that it's a no-brainer to buy. It's and its census analyst target is nearly $50. So according to the analyst, investors have more than 20% potential upside over the next year. That on the short-term potential, though the reason why it's one of the top Canadian stocks to buy today, it's over the long run, investors can earn a lot more, especially when they consider it's also a buy. It also pays dividend, which is currently at 3%. So now looking at the Transalta, um, it's all renewable portfolio, a facility which is located in US, Canada, and Australia. The facility also encompass multiple technology, including wind, solar, and hydro. Transalta adheres to a stable and lucrative utility business model, ensured regulated contract. The span decades provides Transalta with a steady and recurring source of revenue. That revenue is then passed to the new investment and company attractive dividend. That dividend is also distributed to investors on a monthly basis, making it an attractive option for nearly any portfolio. The current yield is about 4.87%. Perhaps most importantly, it's the fact that unlike its fossil fuel burning utility, Pierce Transalta already operates an all renewable portfolio. This means that earnings get routed towards further growth instead of transitioning older dirty facility towards renewable. In other words, Transalta is a superb long-term stock to own for decades of uninterrupted growth. So if you were to look at the performance versus evaluation, you can see um, renewable is about 42% um, times, and the NPI has a bigger circle, and you can see it's more performance versus evaluation. If you look at it, you can see how it looks here. And you can also, I also brought up this chart here where you can actually see the comparison with the TSX along with the NPI and the renewable. As you can see, the renewable has been performing very well uh, above the industry as well. Um, and the renewable is also not too far away from it, but it's also doing well as well, but not as well as the NPI. And if you were to look at who are the competitions in that renewable energy sector, you can see Brookfield Renewable Partners, Brookfield Renewable Partners. So there's two different symbols for that, and they're trading at two different prices. And you can see the yield that also offers. Algonquin Power and Utility, North Power, Transalta, Borlax, and the Initgex Energy. And you can see the market cap as we discussed earlier, and the PE ratio and the yield. So hope you guys can make a decision on what you think would be the best for yourself. I personally like the Northland Power. Let me know in the comment section below which one do you prefer. If you do like me to do videos like this, please let me know in the comment section below. I would love to do it. Please don't forget to like, subscribe, and turn on those post notifications. It means a lot to me. Thank you so much for tuning in. I'll see you guys next time. Take care. Bye.